This is a quick recording. Didn't do the prep today online, so I've just been trying to combine ICC with CCT, candle continuation theory. And that said, I'd like to share what I've done. So just looking here on gold today, we had the 60-minute, let's get rid of that for now, 60-minute downtrend over the last few days. High, lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low. So the expectation is to continue the trend. Now, it may be, if we look at how low this went, actually here on the daily, that we're looking to reverse. So I'm aware of that, but the expectation is still very much, we've got our low, low. At very least, we'd get a equal low. So I was up here at the top, fine, looking for a continuation of the trend. Now, technically, what we should be looking for is an area of balance with here a breakout, a indication, a correction, and the continuation. Because this was also fast, it's hard to kind of identify where those areas of balance are. I mean, that could be a fair to say, but it's quite difficult to see. However, I did see the candle here, the blue one, down candle on the hourly, which is bearish. Now, looking at all the stuff of candle continuation theory, this is a bearish candle. Its close is lower than the range of the previous candle. So this is just ICC basically using candles as the ranges. So this is range, and this is Crimson Capital, the idea, concept. So we have hourly candle range closed outside. That means that we are looking at our take profit as here, and our indication, our point of interest, or our kind of action line at the low of the first candle. So low breaks out, expecting the pullback, and then a turnaround, and then continuation. So that was all kind of happening just before the market open. Where are we? 9:30. 9:30 is when things happened. So looking at that on the larger time frame, we had the area of balance from that 1 hour candle, the move down, the indication, and then correction back in, and then continuation down. So how did I execute it? Executed on the 1 minute, and I think I was looking for a fair value gap. Yeah. So my area of interest was actually a little bit lower. So I think this was a bit of a FOMO entry, to be honest, because I entered a little bit too early. So this wasn't great, because we had this turnaround. What I could have done is waited for the full change of structure here. So up to this point on the minute, we had high highs, high lows, high highs, high lows, high highs, lower lows, lower highs, lower lows, lower highs. So ideally, I would have actually entered here. but or on the break of this fair value gap would have been good below. So the fair value gap is here. Once that closed, I could have entered. Stop. Entry. Whoops. Problem with this model though is that I would have targeted it. The problem with this model is that the stop is so large, 600 point ticks. So that's only ever really won at £100. I think I'm risking a trade. $100. Yeah. So it's only ever going to be one contract on gold, but there we go. That's fine. So entered a bit early. I think I was considering this kind of area of value. I mean, look, it does actually kind of make sense. Or it's hard to know, isn't it? The other thing I could have done is entered there with the 1 minute and taken this as a swing. Give me a much tighter entry. Lower low, higher high, lower high. Break of fair value gap, close, enter. I got a bit spooked here at the bottom. So I was aware that it was a bit of a dodgy old trade. Comes back and retests, interestingly, that hour low of the previous hour. There's clearly something goes on with algos here. And then continue down to my level through a series of higher highs, higher lows. Sorry, lower highs, lower lows, lower highs, lower lows. And then it's starting to balance out here. Now it's interesting seeing these fair value gaps. Don't want to make too much of them, but they certainly do help. So yeah, good move. And to combine the two is very interesting. I mean, it would have been much better to have looked like this uptrend, for example, or to catch on maybe this second move down. So we've got the blue candle. Let's just look at this and see how it would have worked out. We'd have the range as being this yellow. This gives us our entry point here, point of interest, and us. No, we're just not sure. Anyway, our target here. So we would have, for that one, we'd have seen that we've come down. Expectation is to come back up. We haven't actually met there yet. That was the move down. Closed above, closed below, entered, stopped out. Closed above, closed below. It's an engulfing candle, taking out those lows. So yeah, I would have stopped out on that one. I guess the danger is here really that we are not a super secure point because we've had the big move. Anyway, lots to learn, but that worked out all right. So I think it's really about getting in with the longer term trends. You know, where we are right now is sitting at an area where before the last time we were here, there was a huge push. So this is a choppy zone. Okay, we'll come back soon.